today, as expected, reduced the repo rate by a 1/4 percentage point, but clearly indicated that it didn't see room for much more rate cuts. In fact, it added it was up to the government to improve growth through governance and fiscal deficit reduction, effectively saying its own ability to promote growth is seriously limited from here on. Gopika and Latha take you through the highlights of the RBI's credit policy.
The Reserve Bank governor lived up to the market's tepid expectation. He cut rates by 25 basis points. But the key takeaway of his policy statement was that his room to stimulate growth is quite limited. Several economists agreed with him.
They've made specific mention about MSPs in the guidance, so they worry about the quality of the deficit being an election year with a higher, with a larger food security bill, with higher MSP. So they see a number of risks in the second half of the year, and I think that will really constrain the quantum of what they can do.
One constraint on the RBI to cut rates is the persistent high food prices that have kept retail inflation in double digits. The RBI specifically warned against upward revisions to the minimum support prices for grains. Also, the RBI said high growth depends on reviving investment, which can't be done by low rates alone, but by the government staying the course on fiscal consolidation and improving governance, especially on project implementation. If the RBI saw its role as limited, the bankers didn't think they had much room either on rates. Most were sure they won't pass on this rate cut till April, nor were they even sure of a cut in April.
There is always a wedge between the growth of pace of growth in the credit and the deposit. In fact, in some of the tenors, we have had to increase the rate of deposit on the retail front. So immediate transmission by a reduction in the rate before March, I think it will not be possible from the banker's side.
I don't see a possibility of any immediate action or the transmission action, but come April, or say somewhere nearer the mid-April, I think there would be a much greater clarity on the liquidity position.
It was clear from the bankers that neither deposit rates nor EMIs will fall in a hurry. Political events relegated the RBI's policy to a sideshow. Bond yields rose on the RBI's hawkish tone that it can't do too much here on. Stocks were unperturbed by the policy but tumbled on fears of the government losing support. Even when it became clear the government won't be unseated, stocks remained downbeat, fearing that growth may remain a prisoner to political uncertainty and the impending elections. In Mumbai, with Gopika Gopakumar, Latha Venkatesh.
Well, you heard what the central bank did and you heard what bankers will perhaps do. Let's now get in a voice from industry. Adi Godrej, chairman of the Godrej Group and president of CII, joins us now with his take. Mr. Godrej, appreciate you joining us on CNBC TV 18. You know, the Reserve Bank has acted as per expected lines, cutting the repo rate by about 25 basis points. But it's also said that it has limited room for further action from here on. How do you read that statement and what impact do you actually see 25 basis points cut having? Because the banks, as we just heard, don't seem to suggest that it will have any significant transmission impact.
Well, I welcome the 25 basis point cut in the repo and reverse repo rate, but I think it would have been preferable if it was a 50 basis point cut, because we clearly need to stimulate growth at this time. But what was disappointing was that the CRR was not cut, because liquidity creation was just as important, and as you rightly put it, many banks have stated that it will be difficult for them to pass on this repo rate cut as interest rate reductions to industry. So we would have preferred a CRR cut at the same time.
Okay, so they're disappointed by not moving on the CRR, but then does this materially change anything on the ground as far as investments are concerned for corporate India? Because if banks are not going to be passing this on to consumers now, will this lend any sort of fillip to the capex cycle, which continues to be stagnant?
Well, I think clearly the reduction in repo rate will have some benefit to investment decisions. But overall, as I mentioned, if there was a steeper repo rate cut and if CRR was also cut by at least 25 basis points, I think clearly that would have led to a very clear signal of trying to accelerate growth and accelerate investment.
Mr. Godrej, the Reserve Bank's credit policy today overshadowed by developments on the political front, with the DMK threatening to withdraw support from the government. In that context, how confident are you feeling about the reform agenda continuing? we've seen that in terms of fiscal in terms of the alliance with political partners, it's going to be very, very difficult for this government to actually push through with perhaps any big ticket reforms. Do you believe that the reform agenda that the government embarked on is going to face a setback?
I think the reform agenda will continue. I think clearly the government is committed to that. However, the political process leads to a situation where the government loses a majority in parliament and a vote is taken on something or the other. That could be a problem. But currently it seems that with the support the government enjoys from especially the parties in Uttar Pradesh, I think they will continue to have a majority. And let's see how it pans out. I also saw some statements from the Congress that they hope to sort this issue out in a day or two.